Jonathan Tuttle joins the show. He is a fund manager, primarily investing in mobile home properties and mobile home parks. Want to just get you guys a little taste of a different asset class and some creativity. It seems like Blackstone and some other big firms are investing a lot of money into the mobile space. So I want to give you some insight in that. Enjoy the episode. Hydration is a massive key for
Yeah, I know.
success.
I've been drinking the key
Hydration.
lime LaCroix. They're pretty good.
Yeah, the LaCroix are good. I've been going to Sprouts and getting some zero calorie guys. A lot of different zero calorie healthy options, and there are even more, way more ways to make money in real estate. One of those ways is being in the mobile park space. Jonathan Tuttle is joining us today. He's a fund manager, spends most of his time in the mobile home park space, and he wants to come on, intro himself to me and the listeners, and talk about that because we're in an interesting point of just the country and the world right now with pandemic going on, everything like that. So I think it's good for you guys to think creatively and just hear how people are making money in real estate. So Jonathan, thanks for coming on, man.
Yeah, thank you for having me. Excited to be here.
Yeah, man. Well, let's learn a little bit about you, how you got into real estate, and I guess first what you're doing now. You have a hell of a one sheet as far as being a fund manager, investing. Looks like you're on some TV shows, getting some exposure here. So, we'd love to hear what you're doing now, and then just how you got into real estate to start off.
Yeah. Well, first got started involved with real estate. Well, I grew up in the business. So my dad was a real estate developer, contractor. So even like when I was like 5 years old, I'd be on the job sites. He'd be flipping houses. And he was hands-on, boots in the ground, doing all the work. We had, I think, did about 30 flips between like 5 years. He had an investor that was helping him invest in it. And so I really learned firsthand, like just the value of hard work and the opportunities you can make money through real estate if you just go out there and put the work in and you find those opportunities. Later on, he had real estate offices. So even as I got a little bit older, like between 8 and 10 years old, I would see, the brokers in the real estate offices. So I saw that side of it. And then I used to work on the job sites when I was a teenager. Basically, he was a general contractor as well. And so he developed almost 80 houses, and I would fill up the dumpsters. So all the, like I'll just fill up like one or two dumpsters. It was pretty fun. Get to learn, firsthand how to develop a house basically from the ground up. Eventually, he got into the mobile home space in around 2005, and he was like blown away by because he's been all angles of real estate from, multifamily, owning land, farmlands, and just, obviously the developer, contractor, flipper. And he was like, I wish I had got involved in this space like 30 years beforehand. And it was of all our real estate from 2005 to 2010, it was the only asset class that we actually really did really well. When everything else was going bad, we doubled our money on one of the properties, and we also had all the cash flow. And it didn't do any, when during the last downturn, it didn't have any, didn't get affected by it at all. So once I saw that and I knew I wanted to get involved with it, that's really what drove me into mobile home parks.
Very cool. So yeah, you were living, eating, and breathing real estate, and even
Yep.
specifically the mobile home game, and having a lot of success from '05 to 2010 with it. Um, that's very cool, man. What all are you up to now with that backstory of over 15, 20 plus years of experience? How old are you?
I'm 40.
40. Okay, I was just say, look like a young guy. Gotcha. So you've been doing real estate probably more in your life than you haven't been in real estate
Yep.
or close to. That's cool, man. And what all do you have going on now before we dive into some mobile park specifics?
Sure. Yeah. So I have two businesses in the mobile home park space. I have for the everyday person that wants to first get involved, the easiest avenue to get involved with mobile home parks is actually the mobile homes, like either flipping them, flipping the contracts. It doesn't take a lot of money. Sometimes you could get no money down if you find something. I was just listening to one of your other episodes, and the guy was talking about driving around. And you mentioned this in your episode. It's the same thing with mobile homes. You drive around in some of these communities, look for sale by owners, FSBOs, call those people up and basically see if you could negotiate with them and acquire the mobile home and flip the contract. It's the same thing, but for mobile homes. So we have an educational course coming out. It's called the Mobile Home Wealth Academy. And then the other side, if you're more seasoned or accredited investor, we have a mobile home park fund, and that's called Midwest Park Capital. And that's basically for somebody that wants to get quarterly returns, gets better taxation, and we do all the work. We have an all-star team from the property management to the CPA to the fund administration, plus our industry relationships. So it's basically for somebody that wants a passive investment and also to get out of other, to basically, reduce their exposure in other, other investments with the downturn. Mobile home parks have been the safest investment since the last recession. Even Wall Street Journal just had an article about how it was by far the best performing real estate since the last recession. So
very interesting. So you have both the passive for accredited investors. I'll make sure to link that up. Probably not going to be as many people that are able to jump into that, I'm assuming, that are listening to this. I do want to talk a little bit about what I do think people could get into, because that's exactly wholesaling, was signing contracts. For most of, I told you, most of our listeners are wholesaling single family properties. What does a typical deal look like, or what are kind of like the numbers or maybe differences? Like I said, if you could kind of frame that for single family investors, what does that look like, and like why does that perform better?
Sure. Well, it all comes down to, obviously it's a regional game. It's just like, obviously if you're in California, West Coast, single family is a lot more expensive. If you're in the Midwest, the houses are a lot cheaper. And same like if you're in New York, obviously New York has got really expensive real estate too. So just like in residential, it's the same thing for mobile homes. So like the higher the value of land and the higher the cost of comps for single families, the mobile home is going to be more expensive. But the Midwest, for example, you get a 70s pre-HUD home in 1976 is when HUD came out and really not came out, but they started regulating mobile homes. So since then, the prices have gotten significantly better. Before then, anybody could basically build a mobile home and manufacture them and sell them. So you see a lot of like the 70s, 60s, 70s homes that you see. Those are the ones that people kind of call the trailer trash, depending on like, and depicted in movies. It's not like if you've actually gone to a well-maintained park, it's fine. And it's, people are proud of ownership, but certain movies and like, everyone thinks of 8 Mile. It's not as pretty. I mean, there's definitely a couple parks out there, but that's usually like, hands off, slumlords, and that's like in any real estate. But like an older mobile home you can get for a couple grand, if not less, and sometimes free. Or a lot of these people, the good thing about it is it's affordable housing. So a lot of these people, even in the same town, the value to the owner, instead of like a regular real estate, you make money on equity. With mobile homes, the real value is the saving on taxes. For example, some of our parks, if you're across the street and had a single family house, let's say it's 150, 200,000, they're paying, in Illinois, it's really high taxes. I don't know if you're familiar with that, but Illinois and California are two of the highest in the country for real estate taxes. But it's across the street that, like for our park, it's a single family houses, they're 3 or 4 grand for like a 200,000 house, which is insane. And then the mobile home across the street, it has the same school, same fire, same police, all the same access to schools and everything else. It's like $10 a month with their own lot. And so obviously you factor that in, they're paying, a couple $100 a year for real estate taxes, but they're saving 3 grand a year, plus if they lived across the street for their own yard. So if they've averaged mobile home tenant stays 15 years, 14, 15 years, they've saved 45,000. That's kind of like their equity basically.
That's crazy.
Oh, sorry.
No, go ahead.
Yeah. So for like the investor, that's like it. So it helps them out in that way for it's a different way of thinking. So people are so familiar with like, buying the house, getting the leverage. For mobile homes, it's a different, if you're investing in them, it's a different avenue of thinking because you're making the money, if you live in it, through basically saving on real estate taxes and the maintenance. Obviously, it's not, you can't tear down walls. You could just do the basic, flooring, painting, switch some fixtures, maybe some cabinets. And that's, it's some basic minor stuff is all you could really do. You can't be like, oh, I want to tear down this wall and then I want to put in, like, make it bigger. It's whatever you got, the original, 10 by 10, 12, 14 feet wide, that's all you're stuck with. So for somebody who wants to flip them and do a little remodeling, it's a lot less labor intensive. You get a local handyman, you're 2 or 3 days out, come in, basic remodeling, and now you just beautified an old home. So the person comes in, gets an affordable house with low taxes, and you can make $5, 10, $15,000 a flip, depending on your market. And that's like in a 70s home. If you're in California or the rent control states like Oregon, Washington, the houses you can make 30, 50, 100,000 a flip on a double wide, like especially like California. California, it's like crazy. They have mobile home parks in Malibu with like celebrities like Matthew McConaughey, and across the street they have $10 million houses, and then in the mobile homes over there like 3 or 4 million. So it's crazy. We're on this right on the beach. It's crazy.
That is
So
crazy. I'm curious. I wish I had heard this before I was out in Malibu in December because I was hanging out on some of those multi-million dollar properties like right on the beach, which are insane. But that's interesting. The I guess I kind of want to have you re-go over the seller's perspective. We know why somebody in the single family space would potentially have distress reasons on the property itself if the property is damaged, or the seller's distress themselves. If it's, probate, they want to get rid of the property, or they're an absentee landlord, XYZ. We know that. What are the reasons for the mobile home park, or like who's like the ideal person that you're marketing to on the mobile home parks? And it's the saving on the taxes is an interesting perspective that you brought up. I wouldn't have thought about that necessarily, and differentiating between the asset classes there.
yeah, there's two different always clear this. There's the mobile home investor flipper, and then there's also the mobile home park. So there's two different demographics. For Are you asking for like the tenant, what's attracting to them, or for
Yeah,
the
like who no the end buyer, they're marketing to someone. So someone that's potentially listening to this and wants to get into the mobile home space. What's like the kind of I kind of want to get the idea of the 80/20 of like marketing that they would be doing. You already said they would be potentially do drive for dollars, but more so like the caricature seller that would have a mobile home park that would want to sell
Sure, perfect.
or
I'll give you
mobile
both
home property.
perspectives. Yeah, perfect. Great question. I'll give you both perspectives. Well, our space is a little behind in technology, but people, and I know you have a technology focus, is a really good angle. Like Facebook, Craigslist are one of the best places to find actual homes and to sell them. So that actually, if you want to be investing into the homes, you could find homes on Marketplace, and it's free. Obviously, you could do the little boost, but a lot of stuff happens on Facebook Marketplace. And if you're an investor, when you want to sell them, if you post an ad on there, you'll get 20, 40 like messages and within like a week, because there's 60 million Americans need affordable housing and only about 12 million mobile homes in the country. And then you have to factor in every time there's a downturn, people lose their job, and or they have like just, social security, 75% of senior citizens basically just have 30 to 40 grand in the bank account and then social security checks. So you have this huge demographic of people who need affordable housing, and they don't want to necessarily be in a single family house anymore, especially if they're older, or if somebody just lost their job. They don't want, the bank's not going to give them, they're not going to be able to put 10 or 20% down. They might not have 700 credit. So you fill that void right there. So and then the way you can reach a lot of these people is through social media, like Marketplace, Craigslist. I know some people say let go. I haven't seen much, success with that, but like Facebook Marketplace in most markets will be a really good avenue to find deals and sell deals. And then for the parks, that's the traditional owner. Just like I said, the technology game doesn't help it too much. The traditional owners are usually people that developed it 30, 40, 50 years ago, and either they pass it on second, third generation. And right now, because of all, triple net lease are having a hard time. Retail properties, restaurant properties, obviously e-com's affecting that. Restaurants, because you can't open during COVID, or 25% occupancy, whatever it is in certain states. So we're seeing a lot of people switching over, and right now it's been the most demand ever, because in the last 50 years, it's the lowest default rate of any real estate in mobile home parks from bank data. So stable long-term investment, because it's the supply and demand curve. You can't really develop new parks, about 10 or 20 in the last 20 years. And usually it's an RV park. So I've had a couple of guys I know, they're like, oh, I've done it, but I'm like, was an RV? Yes. Well, RV is different because it's basically the same thing, but the cities allow it. But most cities don't allow mobile home parks because of the taxation. Like I was mentioned before, they get less money for taxation per resident, and like the reputation. Like some people think it's really bad, but there's also really nice parks out there.
Got you. So not too much different than what a motivated single family seller would look
Right.
like. I'm curious, just since we're talking COVID, and kind of seems like we're in the period of, at least it's somewhat opening up. Like I'm in Maryland, and stuff is more so opening up. You said before we started recording, Chicago is still somewhat
Yeah.
shut down, or not as open. I'm curious, I know you have a bias towards mobile, but just how the real estate market in general for single family, commercial, multifamily, how it's going to look if you had to guess. I know everybody has their own opinion. I know that you're a fund manager for mobile, so you're biased towards that, but would love to hear kind of just a broad stroke answer on where you see things going the rest of the year and maybe into 2021.
Sure. Well, I'm not completely all biased, but I mean, like I mentioned at the beginning of this, there's all avenues for anybody to make money in real estate. Finding
Yeah.
key tip definitely is just finding a niche or two that you could really dominate and become the expert, where people send you leads, and you'll be successful regardless, or if you become the go-to. And our niche is actually, we have like a 4 or 5 year run where it's getting so compressed because you can't develop new ones. Like in 5 years, it's gonna be a lot harder to actually get quality assets because people keep them for 20, 30 years, and plus everyone's trying to buy them. So it's basically, we have to also kind of factor that in and look at other asset classes in the next few years. Um, I like self-storage is pretty comparable. A lot of people like self-storage at like our niche, or they actually own them. We've been less consolidated. We've been around 25 years longer than self-storage, but they've been consolidated a lot more. You have a lot more institutional buyers been buying it. We only have about 5 or 6% institutional, but in the last couple of years, the biggest private equity, Carlyle Group, Blackstone. There was just an article on Blackstone. Is it Blackstone or I forgot? I think it's Blackstone. It's the biggest landlord in America. They bought the most housing during the last downturn, single family houses. It's a,
Mm.
they just it should be, if you Google it, it should be an article as of like Tuesday. I think it was Blackstone. It just did a $550 million bet in mobile homes. So they're factoring in with the next downturn. They're going towards mobile home parks. Carlyle Group is the biggest private equity in the group in the world. Apollo is like the second or third, and they're all trying to buy billions and billions of dollars in mobile home parks. So that kind of navigates and shows you that's a good niche. But I like self storage. Depending on how COVID turns out, and if we have like a cure to it or some kind of, kind of figure this out, which I think eventually happen. Assisted living centers, I like that other end of it. It's kind of like multifamily, except luxury. And it's basically, you have captive rich, they're basically rich, or more successful, or people that saved or have a lot of money. Like an average, you're looking at $6, 7, $8,000 a month for senior living, and it's a really profitable niche too. So I like assisted living. I'm a little looking into RV parks. It's a little different than mobile home parks. If you're in Florida, Texas, you also have like the snowbirds from like California, or not California, but Canada. I'm sorry. So they'll actually, I don't like RV parks where you actually have to have people coming in every day, and you have to have somebody collecting checks, and you have to cash, and you have to, keep track of them. I like RV parks where it's like, hey, we have a second home, we have a $200,000 RV, and it's in Florida. We come down there, we just pay the full year rent, and we use it, a couple times a year. So I'm looking at RV parks, but like the long-term ones. So later
Very
on.
cool. Very cool. And in general, I like following the money. So
Yep.
if Blackstone if you say, is investing billions of dollars in mobile, I think that's
Yep.
probably a good direction to look in. Well, man, this has been a good kind of like intro discussion on, single family investors learning about mobile. I'm definitely going to grab some resources and things from you, from your team that got this interview linked up. I guess I was curious to kind of hear you also are involved in like nonprofits and kind of have a lot of success. I do like to try to extract that because it seems, a lot of people do fail in real estate. Most people that are probably listening to this have some type of sustained business. But I'm
Mhm.
curious for you. I know that we've talked about, you grew up in real estate. It was probably more of a challenge for you not to be successful in real estate just from your family involvement and you doing so much work from a young child. But I kind of like to hear just what you think has made you successful in both, starting a fund, the transactions, the nonprofits, everything like that. TV, pretty well-known guy in Chicago and nationally there. So just love to hear an open-ended answer on that may be able to help the listeners.
Sure, sure. Yeah. So I definitely recommend reading a lot. I think that's the biggest game changers. As technology evolves, you still need to have that foundation, those, the background. Warren Buffett, Charlie Munger, and a lot of like the most successful people in the world, they read all the time. So that gives you a competitive advantage. And you have your tech company or technology, like some Peter Thiel, 0 to 1, some of those like those Silicon Valley type books will really give you like a foundation. I think really the biggest thing in any business you start is realize that it's going to be a journey. It's not going to be right off the bat. And nowadays with technology, like we have, Facebook ads and everything looks so easy. Like, oh, I did this in like 1 month. All the Facebook ads. I just ran some Facebook ads and now I'm rich. But the background of it allows people that sell those courses. Yeah, they do make a lot of money off the courses, but a lot of them have been in business for 5 or 10 years. It
Mm-hmm.
wasn't built, 1 month. It was, foundation was laid. They probably failed a few times. They pivoted and they found an angle, and they found a service they could help people with. So I think the biggest thing is just like being tenacious, being resourceful, being courageous. You got to take the step. Like every little no and every step you take is going to build that foundation. Getting mentors, like you were mentioning before, getting mentors and coaches. So like you're getting that advice from somebody that's done it while you're taking action daily, you're going to improve and you can see where you're failing. You also have guidance. Just paying for that, that's going to really get people ahead. Even if you don't have that much money, put it in something that's going to bring you, tenfold return, and that's knowledge and, relationships. So investing in those, relationships, take action, everything you learn, test it out, be a mad scientist. Not everything's going to work. Not everything's going to be a product market fit. Well, product market fit is basically means testing to see if the market will accept what you're offering. So, and I think that's a lot of people, if everyone's doing the same thing, you have to really niche down and find your little product market fit. And I think with going forward in the future, just really finding a niche that you like and enjoy, and you could see that it's improving. It starts, you start getting results and you put your work in after time, then you start to scale it little by little and have the mentors coach you and then build out your team and scale accordingly. So.
Very solid answer that I could not agree more with, as far as reading as much as possible, getting mentors, coaches, investing in yourself is the number one thing, and then also in relationships. Relationships are life, some people would argue. Some men and women wiser than myself would say that. I'm curious, as you were giving that answer, Jonathan, what are some of the best systems and processes that you have in place? As we were talking systems and processes for different SaaS companies before we went live here. I'm just curious, what do you think are some of your favorite systems and processes, or maybe even hires that you have in place that just save you time, get you locked in and allow you to be in your, your genius zone or your highest revenue generating activity zones throughout the day and the week?
Yeah, I think, well, first, a tip I always run, which is really effective, and it's like kind of a Silicon Valley, is basically turning off your phone when you can. So
Massive.
turning off so you don't have that, you get that, that flow. You get a couple, 3 hours, 2 or 3 hours, and of just like uninterrupted work is huge. So the technology is great, but you also have those, notifications on. I turn off all notifications, especially when you start getting all these apps. All of a sudden, the whole point of the app is to get your attention. So you have like 50 notifications an hour, you're going to get out of flow. So turning your phone off when you can is anti-technology is great, but then using the technology when you really need it, and that's when you really get that time leverage. So I have probably like 30 or 40 different softwares I use, like everyone else. One I use, it's called Minimalist app. It's pretty cool. It's like the best app for time blocking I've seen. It's on Android and Apple. It's really just simple. You put your schedule in, it reminds you every morning, and you just literally just get your schedule. So you make sure not only you're time blocking, but you know what you have to do during the day. So you're gonna be more efficient, get what you need done. I think that one's key, because once you realize how much time you have extra in the day and you actually focus on hitting those goals and actually setting goals, you're going to do a little bit more each day. And a little bit more each day compounds over the course of the week, over the month, over the course of the year. So you don't realize how much extra time you have when you really take your efficiencies from the technology, and then also making sure you're efficient with your time. And then softwares, I mean, pretty much any software. Our industry is kind of archaic when it comes to technology. You're dealing with the average demographic at least for the park owners. For us, we're dealing with, baby boomers who didn't grow up with it. I'm sorry, did you hear me?
I hear you.
Oh, okay, okay. So yeah, we're dealing with baby boomers that didn't grow up with technology. So here's another tip too, I think, because I'm, at the end of a millennial generation, like my age group, but we grew up with technology, but we also grew up old school. We actually had to go meet people face to face. So I think the people in the future and the younger generations, like all tech focused, be a combination of both. That's what's going to win. So if you could actually leverage all the technology, all the softwares, be hitting people through all the social, digital, paid ads, LinkedIn, obviously using all the different SaaSes, but then still go, like I think one of your last podcasts that I just listened to, the guy was talking about going to trade shows, the face-to-face relationships. Then you have the technology compound on that. That's what's going to win.
Love it. Very solid answer, man. I love all the nuggets that you've been getting. It's really solid stuff in a concise way. What is the best way for people to reach out? I want to put some of the information, and I believe it's the course or the academy that's coming out soon for mobile. but what's the best place to reach out to you or kind of follow along with what you got going on?
Sure. Yeah, appreciate it. So the Mobile Home Park Academy or Wealth Academy, so it's called mobilehomewealthacademy.com. That's just a regular sales page. We have 2 funnels being built, so those should be out pretty soon. But there's like sign up list on there, and you'll get notified when it comes out. So mobilehomewealthacademy.com. And then if you're a credit investor, if you just want to learn a little bit more about the mobile home park, go to midwestparkcapital.com. That's just more of the informational website. And if you're a credit investor, thinking about investing, you want to see the private placement or basically more information about the company, midwestparkcapitalfund.com. And then on Facebook, if they just want to connect with me on Facebook, it's Jonathan Tuttle Official or Official Jonathan Tuttle. I forgot which one it was. But if you type my name, I'm sure we'll probably have some. Well, I probably have a mutual with somebody. And then also, I got my name on Instagram, so it's at Jonathan Tuttle. I was lucky; I got it when it first came out. So,
Yeah. Cool, man. I'll give you a follow on social and be sure to put that in the show notes. Well, appreciate this, man. Always good to get creative ideas and hear about other, asset classes and where big money players like Blackstone are investing their money here moving forward. As everybody, I think, should be open and receptive to just other ways to make money, which is really providing value to people. So I hope that you guys got some good stuff from Mr. Tuttle here. And thank you, sir. Appreciate your time. And we'll definitely be in touch when this gets released. And we'll connect with you on social here after the show.
perfect. Thank you for having me on. It was great. It was fun.
My pleasure, man.